subject. Okay, welcome everyone. We'll start. As you know me, couple of you, my name is Anjum Satta, and I'm working with the University last 10 years, and I'm also teaching at University of Bradford. I do some work for Leeds, and I'll do practice as a professional accountant. I'll try my best here to meet your expectation. And this subject is all about taxation, of course, individual as well as business taxation. So please, whichever year finance sector you want to follow, because it's not exam based course, is assignment based course. So we can pick, any example of your choice, from the booklet. I'll share with you the booklet, but we'll apply the new rates and sell some handouts. I'll send you separately each chapter wise. So like, if you inherent tax is business, marginal relief or allowance, capital allowance, those, and we can embed, those examples from these handouts as well. And those I'll share with you on the WhatsApp group at the end of lesson. Okay, so if you don't mind to quick introduce yourself, please, what you do, keeping in view of GDPR, if you don't like to share anything, that's absolutely fine. We just want to know each other, so we can include example from accordingly in the following lessons. Yes, please, if you don't mind to introduce yourself, please, then we'll start our lesson.
Sorry, is it me? Must I go?
Yes, please. If you just your name and what you in term of, if you want to share in term of GDP, you don't like.
Yeah, my name is Susan Humphreys. I'm a South African, but I'm a professional accountant and tax practitioner in South Africa, but I'm living and been living and working in the UK for 8 years. So I now am wanting to get my qualification here so that obviously I can start practicing here in the UK. I don't know a huge amount about the UK side of taxes, but I do see that it's very familiar and very similar to South Africa. So yeah, that's me.
Brilliant, thank you. And if you don't mind, which city you from? You from here in Manchester? Or are you
No,
based
I mean, no, I don't know. It says I'm Manchester on my registration, but I'm Cornwall.
Oh, Cornwall. How's weather there? It's here in Manchester. It's raining. Is weather
Yeah, it's
changed?
always raining.
Thank you. Thanks for sharing. Well done. Thanks. You have plenty of experience, so please, share, your own experience as well. Will be great, so we can learn from each other experiences. Thank you. And who's next, please?
It's Lady Prabha.
Yes, please. Yes, please. Can you hear us? Can you hear me? Okay, so if you can't speak on the mic, you can chat in the chat box, so that's fine. Okay, we'll start then. Okay, hope you have access on our Moodle page. Yes, please. I'm not sure. Do we have access on our Moodle page?
Do you have a what on the Moodle page?
Access on BLE, Virtual Learning, where you can access all the required resources on our University VLE, which is meaning you can access and you can download all the required resources from. If not, so we can ask, our admin team, they will send you the password and ID.
I've got my on the Moodle, I've got my assignments and all the books and resources and stuff, but only the ones on Moodle. Is that what you're talking about?
Yes, Moodle is a BL. Yes, which I'm talking about the Moodle. So if you have access, that's great, which is good way to move forward. So we can look around resources on Moodle. Plus further, I'll send you good few as well. Extra books and article, especially, ACCA, those carry on publishing on the tax, issues.
All right.
Thank you.
I am battling with hearing a little bit. I'm battling, I think, yeah, I'm not always hearing clearly.
Oh, sorry. Maybe sometimes it's slightly maybe sound issues a bit annoying, but I'll try my best. I'll do a bit recap. Yes, if
Yeah,
anything.
that's all right.
Yes,
Yeah, thank you.
thank you. Okay, so one more minute. I'm just almost there. Summary, then. Hmm. All right, that's fine. Okay, welcome everyone. We'll start, lesson one. Today lesson will go through LO1. Before starting, we'll go through what we're supposed to be learning next, few lessons, please. We are going to start a new subject, which is UK taxation for business and individual. Really, this aim of this unit to develop, good basic understanding about things because taxation rules always carry on changing. So please, we need to be make sure we follow the Finance Act, which I'll share with you, whichever year you follow, because sometimes you have a client, you're doing old returns, some outstanding, or if any example. So we can use Finance Act 2024, 25, or you want 25, 26, which is because our until 31st January is absolutely fine to use. But normally for ACC exam and other awarding body, we can use more latest, depends, which month you're giving your exam. But it's an assignment based course, so that's absolutely fine. So understand the advanced, aspect of the UK taxation system, which we'll go through, and we have these, assessment criteria. Please, we'll go through the income tax liability relating to overseas aspect, of course, which we can look around, explain, application. This lesson, please, we'll go through generic discussion. Then when we'll do assignment discussion, so we'll go through and we'll embed, some numerical examples as well. Explain the application of the additionally, exemptions and relief. We'll go through those. We'll discuss about the chargeable gain and capital gain and tax liabilities. And please, examine the application of inherent tax, which will go through some examples of those. Evaluate the income and income tax, liability and assess, use of the stamp taxes, because of course a lot of things change, in recent years. And of course, HMRC perspective is, and of course this Labour government is changing, more taxation changes will going to be happen. Thanks for joining, please. So which will go through further and assess, application of the corporation tax liability relating to overseas, which will discuss, the resident and residency rule, and we'll go through the VAT, please. VAT is a value added tax, which we know the 20%. The standard will go through the a reduced rate, which is 5%, exempt different schemes, which we'll enhance in the next lesson as well. That's the overlap, which we'll go through in the second lesson as well. Lesson 2, please, we'll go through apply the tax, in a given situation. Will include, number of examples. Lesson 3, apply the taxation planning. And lesson 4, please, which will go through the stakeholder communication with various stakeholders about the tax affairs and why is important. That's all will be. So please, and each lesson we have an indicative content what we're supposed to be learn. So please, tax scope of income tax, income from the employment, income from the self-employed, all in our discussion. And these are the overall, the key points we'll cover in overall all discussions. Corporation tax include, which will go through the scope of the corporation tax from the total profit. STEM taxes will go through, and the value added tax, and VAT and different VAT schemes, please. Those are because either you do cash accounting, annual accounting, standard, flat rate. These are the more important schemes, which we go through. And please, if you further want to, I can give you separate handout on just VAT and the separate booklet for this. So that's, which we'll go through. And please, when you I'll just quick show you. If you go ACCA, I'm looking finance at 2025. So please, you can find through, because that's very good in terms of structure, which we'll go through in just 1 minute. I'll show you. So you can see. Okay, and we'll discuss about rates as well. So please, it's quite good to look around the finance and the finance sector. So which will I'll share with you. So that's the key really we need to be focused and we need to understand. I included in my slides as well, which we'll go through, and then we can embed more examples during our discussion. So we'll start, please. Thanks for joining. Welcome. Okay, so always good to be, when we start anything, we can reflect, how much I know about income tax, corporation tax, or overseas tax element. Of course, it's a vast area. Maybe it's, these lessons not thoroughly, but we'll get the concept, then we can deep dive, but we are focused more about assignment, how we can address all the learning outcome. Of course, the taxation is, of course, you need to be look around the client scenario, and then you can do the planning accordingly. As I discuss about indicative content, what we're supposed to be learn, then please, this is the key we need to be, which will go through. When we're looking at the tax, this is the finance act. Really, we need to be understand the document, and then of course apply the rates. Of course, nowadays software embedded, either using Sage, Zero, whichever, or Capsum or cash flow. These are all the software. So it depends. Because most of the rates, the firm embedded these, then of course your software, but still as a knowledge we need to be. And because when you're giving advice to your clients, you can look around, then of course based on the rules and the legislation and the tax rate, then you can advise them. Tax planning is illegal, as we know. So please, the basic rate is 12,570, the personal allowance, then is a 20%. Then of course, dividend rate is 8.75. Higher rates, please, then we can look around 40%. Of course, a lot of debates going around on the tax and NI, please, as we can. If it's a saving income, if your basic tax payer, then it's up to 1,000. Your saving income is exempt, like on the interest income if you have. And then if you're a higher taxpayer, then of course 500 is. But the dividend is up to £1,000. All the taxpayers, that's is exempt, please, which we can according to the fund, whichever year finance act you follow. So please, you can go back and look the rate, and then you can develop good understanding. Please, it's always good to be attend CIPD session, which is continuous professional development, IFA. So if you go on the website, because you, of course, you're a student, IFA direct qualification through a THE with delivering care. So please, if you want to attend some network events, so I'll refer you and I'll share with you those network events on our WhatsApp group as well. So please, if you want to. So if it's a marriage allowance, transferable amounts, which we can look around the income tax limit up to 100,000. If you any pound extra you earn, because your personal allowance will be reduced. That's we need to be keep in mind, so when we'll do the tax planning. Other benefits, of course, 50,000 and threshold, electric cars and pension, motor car, capital, corporation tax, which we can look around further in according to the new Finance Act. 19, and then of course we can go back to inherent tax, of course, which we can look around connected person and rule, capital gain taxes, which will go through investor relief, employers and NIs, please, we need to be look around those according to the rates and the classes, and these are, and they're quite crucial, the question really we need to be okay. One of the question really we need to be look around, is it the person is a resident for is the tax purposes are not resident, so we need to be look around, because the domicile are in different types of the taxes, value added tax, direct indirect taxes which will go through, and then of course case law. So we can, as the law detailed regulation, which will discuss some of in HMRC website, of course, give you full guidance which we can follow. When we're looking the method of operating businesses, of course, when we look at business tax, sole trader, partnership, and companies, of course, sole trader, the personal allowance accordingly, and partnership, of course, we can look around the partners, and then drawing, and then the companies, of course, corporation tax. Okay, so type of incomes, please. Income from business, trading, income from employment, bank, building society, interest, property income, dividend. So those, we can look around the perspective, and please, if you have any question, and the year run from the dates, so our financial year from 6th April to 5th. That's which we can, and all type of the income added it together to call total income, and total income minus trade losses is called at net income. Of course, we are well aware of personal allowance, which I mentioned, 12,570. Maybe a couple of slides indicate still or, but we are carry on because we follow the Finance Act, whichever year, so we can follow the rates accordingly. Okay, so tax calculation, really we can look around the layout, we'll look around the taxable income, and then we'll calculate accordingly. So please, these are the three. Really, tax planning is illegal. Of course, we can advise to the client how they can plan the tax sometime, not by now, and by our wife's name, our partner's name, our friend, children names, or any other. So please, that's tax planning is illegal, which we the accountant we can, of course, tax evasion, illegal and deliberately misled tax authority to reduce their liabilities and may result to fine or imprisonment, depends the nature of the. So currently legal tax avoidance to make it loopholes, and we can think about and reduce the tax bill. Of course, is a morally maybe it's not correct, and we can look around ethical code of conduct, please. Allowable or disallowable expenditures, that's sometime is a gift to customer not the costing more than £50 per donation, and that's which we can look around. The redundant pay, of course, then again which we need to be look around on closing the business or excess over the statutory amount limits, 3 times of statutory amount, which will go through. CO2 emission and emission taxes, which we of course, when we're looking, the gas, electricity bill or various other fine, so we need to be look around each area, separate legislation, fine, penalties, depreciation. Normally it's not allowable, so please, which we need to be, depreciation is not allowable for the tax purposes. You have to add it back, because we do for our own value of the asset. And capital expenditures, please, capital allowance, which we can insert in case, of course, property rules and property taxes. There's a lot of things change, so we need to go back to the property tax. We look in the booklet and we can follow the rates, accordingly. And the legal fees, of course, are relating to and the general provisions and wholly or partially the trade purposes. Of course, we can keep ourselves or any charity you're paying, the tax on it, which we can. You work as abroad, the temporary, so we have to look around because we'll need to be consider your tax, position for the UK and overseas, because sometimes it's because that's a question mark, sometimes people work abroad and they are then coming back to the UK. Of course, then we need to be look around the domicile, we need to be look around the connection and their income, which country they pay the tax, of course they have to declare it. Can't be double taxation, but declaration is very important. So we have to look around the section of HMRC and the book we've been given, and which we look here. So let's look at example, please. So we've been given example in this case, is limited, incorporated in overseas, and also its director are the based in the UK and hold, their board meeting in the UK, and the company that's, incorporated overseas only treated as being the resident in the UK. Their central management and the control is exercised in the UK, like Unilever headquartered in the UK, and their, the UK tax purposes. So that's, a lot of debates, especially in the Theresa May government, when the Facebook only paid £4,000 tax, and the number of other issues happen and they balance the book, So we can look around those perspective. Board meeting, and these are the criteria we need to be in control from the UK, and therefore resident in the UK. So if the director was to be based overseas and to hold their board meeting overseas, then the company would, probably be treated as a resident of overseas, and the central management control would then be exercised outside the UK. Then, of course, the tax rule will be different. That's, we already had some discussion in the past, the election. The prime minister wife, declared the income overseas, not declared in the UK because due to the domicile, and she not break the law, but sometimes in the ethics and morally perspective, maybe not right. And so those we can look around during the year end, and that's, some of examples which we can look around the dividend income with the holding tax with the held, dividend. Of course, we can look around the rate 8.5 and other 32.5 now, please. And we can look around the companies and less, the voting powers. So we'll go through the parent, subsidiary, and associate elements, which we can look around when you're deciding, tax purposes and the control and overseas board and the branches. So please, when if you as a company, if you own 50% or more shares of other company, that will be called subsidiary. If you own 20 to 49%, that will be called associate. And if you're investing, if you have owned the shares less than 20%, that will be called simple investment. So when we're looking, please, we have to look around those perspectives, and then we can do the tax perspective as well, because of course control and head office and all. Capital allowance, please, we can look around. Capital allowance is allowable. We have to look around the main pool asset, special pool, short life asset, and private use asset. So please, we need to be look around capital allowance, especially short life assets, and thinking about, that's why the tax planning purposes, capital allowance is the key areas really that we need to be more focused. Annual investment allowance, please, which we can look around the limits from 1st June to 31st. We can apply, the portion of depends, yearly, and then of course, this phase in the mid of the year, you're starting things. So written down allowance 18%, 8%. Of course, go back to the Finance Act, which we look again. Please, if you want to look around, a couple of you I mentioned you in few times, please. Open Tuition, yes, is a free website, and look F6, please. You can download the booklet from, and you can set up account, and we can look around F6, of ACC exam. I'll upload, some article and the books latest one as well, where we follow the rates, and we can pick some example, because it's an assignment based course, and we look, more towards the assignment, how we can address all the learning outcome. This is not exam based, but we can get a good basic understanding about it. Private use of asset, don't put the private use of asset into in that's because that's you can't claim the capital allowance. The balancing adjustments or transfers in the next years, the written down allowance, the proportion if asset disposal of, so please we can look at. That's why it is. Okay, this is free. You can make the dummy email, which I'll show you, and then of course you can download the booklet if you. And each chapter, if you want, like you want to be capital allowance, you want deep dive into. You can look the chapters, watch the video, and we can get deep understanding about things because half an hour, 40 minutes, 1 hour is just on the one chapter, lessons. Or you can little bit you want to watch it as you want. So because it depends how deep you want to go through the knowledge wise, which we'll discuss, and I'll show you in a minute. So please, the company taxable total profit is arrived. So we can look around that taxable trading profit, interest, other income, property income, chargeable gain, and then of course we can look around and the less any qualifying the charity donation, then we can say total taxable profit. That's the layout we can follow. Normally, of course, nowadays we filling the form online, and of course we can generate the report. And if you want to be dummy report, you want to generate and you want to throw as examples, then which is absolutely fine, which we can for the assignment perspective. Of course, interest, property income, which we'll go through, and then of course the selling of assets and the proportion of the asset and their value and the tax purposes, how we can, and the period, because of course period is longer, we need to be divided according to the act, and the tax purposes, please, which we can look around in corporation tax, yes, CT, which we can, and then of course, we look at the finance act, whichever year we follow, of course, we need to be look around. The basis of the dates and the commence of business, 18 months, your accounts, and then of course, we need to be look around which period accounts you're developing, submitting to HMRC and the company house. So we need to be look around those perspectives as well, which will go through the finally. And if the business is close off in more than 12 months, less than 12 months, so we need to be proportion, and then of course carry forward and deduct, so up to 5 years, please, plus the current years, if you have a losses, we can carry forward, and we can, and capital allowance, which we can. So we need to be looking on year 1, year 2, and those, which we'll go through in a minute. And trading losses, which can be up to 5 years plus current, and that's, which we need to be carry forward or back forward. It depends, So always good to be, please. First, we'll go through the claim, whatever the allowance we have yearly, like personal allowance. And then if you have a tax liability, if you have a last previous years, you can carry forward and adjust it, and we can look around the capital allowance, depends, in terms of the business perspective. As we said, tax planning is illegal, which we can, and we can look around the residency rules, which is 183 days, and domicile, and the connection between your major. Please, when we'll go through whichever years, it doesn't matter in slide in the rated previous years, trading profit less losses brought forward, and then other income, net chargeable gain, trading current years, and carry back or forward. So please, we can look around qualifying period. So those we need to be look around, which we can. Of course, we need to be look around the corporation tax rate, 19%, and the property losses, please, qualifying. Then again, it's a company property on it, or is it the individual? So that's we need to be look around the relief perspective. Okay, chargeable person and disposable asset, please. So 3 elements in needed to be chargeable gain arise. The chargeable, disposal. This is include the sale, gift, and of course, the asset. We need to be look around the chargeable person, the company, then individual, and chargeable asset. The most of the asset are the chargeable exempt. Those assets is like cars, couple of are some chattels, which will go through those in like the racing horse, and those are in peaks up to certain limits which we can. So please, when we'll calculate, we have a couple of formulas as given a HMRC. So we have normally calculators or calculate online on the software. So commute the gain. So how much is the proceed we have, less the cost, and how much chargeable gain we have, and then we can look around the tax purposes. Please, we need to be look around the capital gain if is a higher 20% rate at the cover and the 10% gain up to the amount of which we look around again, which will go when we calculate these and dates, so it's very important. So whichever year of finance act you follow. So we look, in a minute, new finance act, and then we'll calculate the gain and that's, the tax purposes and the tax liability. Okay, when you do the shares and in taxation, please, different times you buy and sell, and of course those we can, and in the indexation factors will be assessed in the losses on these, which need to be part of disposal of the property. Please, we added, like, so if your the original cost was, first suppose, is uh 30,000, 18,000 worth of asset, you sold it, it was now is quarterly remaining, and estimated the value is now 30, so lower and high values, and then how much was the cost, so proceed is 18,000 less, incidental cost of the disposal of the asset. If you have those, we can minus, unless, which we look, like by using, so what if they can, so we can proportion it, and then of course, we can, so how much is the chargeable gains, that's, which we can calculate, which will go through further. As we mentioned, the chattel, please, the gain on the chattel sold on the gross proceeds 6,000 is exempt up to, and if it's more than 6, of course, then we need to be look around in the light of it. So we have to look around where the cost was less than 6,000 amount, so we have to think about 6,000 chargeable, the gross proceed times by 5 divided by 3, so we can look around those we can charge by using at the proportion, which will go through marginal relief as well in terms of when we look at the market values and things. So please, we need to be look around spouse and the civil partners are proceed disposal between, the spouse and the partners don't give the rise to the gain or the loss, so we have to use the asset 20,000 and give his wife, actually when the market value was 30, so deems proceed 20,000 less, the cost 20,000, no gain or loss, because we can look around in terms of, the partners. And of course, again, we'll go back to the, okay, so please, inherent tax, again, we'll go look around 325,000, 40,000. So we have to go back to the finance sector, and we look around the connected person, death, the gift within 7 years route, pre-death and other lifetime gift, so those we need to be look around, is it connected person, the rules, for this, and the chargeable gain, the gifted properties and things, so we can, in the light of the finance act, again, because the transfer value, the specific exemption, like, the amount chargeable transfer, the tax calculation, so please, which we can, and the band, and we can look around those perspective. So the nil band, that was previously 312,000, and then of course, is less if you have the pre, the gift and nil band available, and we, for the calculation of the debt, and within 7 years pre-death, so if we transfer, so we have now 25,000 inventory. So these, which we need to be look around in that, because a lot of rules change, so again we need to be go back to the looking the rules age. So 3 to 7 years pre-death, the percentage will be dropped, and the reduction in, so we can transfer, and that's, which we can again tax on the chargeable amount in pre-death 40 less, tipper relief, and chargeable after the tipper relief, how much we have, which relief is available, so which we can look around the lifetime, the gift only 3,000 per tax year, carry forward 1 year only, and the grant, so which we can small gift up to 240 per donate. Marriage exemption, please, 5,000 per parent to families and kids, and then of course, 2,500 per grandparent, and the party to marriage, 1,000 and others. So we can look around these in terms of, we can give, and that can be the person taking it. It can be free. So we can look around again, market values. Those we look, in a minute. Okay, so please, these we need to be look around the rules, and I'll show you, and we look, in the following lesson, net realizable values and all these other values of asset. Please, we included it here is a link that's, which further I'll update, and that's, we need to be, I'll show you, and that's help, Uh, okay, so let's all go through. So please, this is a lot of examples we use from ACCA booklet. Uh, so we'll uh, update, so let's look first. So this is the document we can pick, when we'll write, we'll go through some examples. So please, we have the Finance Act. So we'll see here, please, the rates, all, the rates we can, and we can look around some examples in a minute, and a lot of articles available on. So if we look, and when we'll do our examples, we can look around the document, and for VATs, which we will go through separate documents. So Finance Act articles, yeah. So these, please, and that's the rate we have, and I'll go through good few examples for you, example document. So I'll share with you. Okay, so please, I'll share with you this document, and we have the plenty of examples. I'll share with you 2024, 5. So like rates we have, and then we have a little scenario, each example, the profit, how we can calculate the tax for, because of course nowadays we use the electronic calculators, we can put the things in order, of course, but it's good to be the basic understanding about tax liabilities. That's, which we can, and you will see there the pension, saving income, and good few dividend allowance. Okay, so please, that's we look in each, in details, which we'll go through. Okay, so that's document I'm going to share with you. So please, we can pick some examples, and it's good to look around, because that's to help you how we can apply the rates, how the rates being applied in different scenario. So that's, it's quite big document which we can look around. Okay, other than these, please, this week, we said VAT, and when we'll go through VAT, please, we need to be look around the VAT schemes, so you look at the VAT schemes in a minute, but those are quite good to look, that help you. Okay, so anyone, any question until now, please, if you like to ask, which will, and because these first we could look at rates, and then we'll go through some numericals. Yeah, those we can. I'll just show you a document. We can go through little, the schemes of different VAT schemes. So we can look around in these different VAT schemes, which is annual accounting, which we can use with the cash accounting scheme. So it's mean, you do the one return in a year, and that's, very popular in, when the turnover is 150,000 to 230,000. That's, which we can do this scheme. And then of course, we can look around again, the legislation rules carry on changing. So please, we need to be make sure in the light of, so we can look around. Okay, I'm just sharing with you, and I'll send you all, these documents. Okay, so please, when we do the VAT, we're teaching various sort of just so we can look around the standard invoices, performance, and these are HMRC perspective. I'll share with you these, so how we can different VAT scheme. Yeah. EUs, of course, we are outside EUs now. Trade discount, of course, the settlement, cash accounting scheme, and a couple of activities. Tax point is very crucial to understand. When you're dealing with the VAT, so the date of actual date of postage or date of when you receive the cash. How we can count in this quarter or the next quarter. So those we look. These, and I'll send you separate chapters activities so we can look around for the sake of to enhance our understanding about VAT elements. Give me a minute. I'll just share with you full VAT. Sorry, it's not free. Okay, so please, when we look, these schemes, so we have annual accounting. Annual accounting is again, we can look around the latest finance act, but normally these are staying the same. Okay, so annual taxable turnover must not be exceed, we can look around the limit you've been given excluding VAT. So it can be, if you're on the same scheme, you can look around 1.6 up to that point of turnover. So we can keep on that scheme. Annual accounting can be used in cash accounting scheme. It means you're doing one return, but when you receive the cash, then you do the return, because if you're on the annual accounting and the cash accounting can be together, because you do only one return in a year instead of if somebody's turnover within that limit, they can choose the scheme. But if their turnover go up, within next, 30 to 45 days, then of course, we can look around the flat rate scheme. It means only one, so you can't really input output advice invoices. It's just a matter of charging the VAT, and that's 150,000 to 230. So I said earlier the other way around. So we need to be make sure we can follow these schemes. Of course, administration of VAT. We need to be look around the penalty side of VAT. Of course, if don't submit it, of course, HMRC perspective, we need to be look around. That's we need to be, and that's which I'll include in, and we can send it. Okay, so I mentioned earlier, please, how we can quickly. Yes, please. Anyone, any question? So this is the open tuition which I mentioned here, please. It's good to be, if you go here, I already created account. It's a free dummy account. Any dummy emails you can make it, because sometimes they carry on promoting things. So please, we're looking here, TX tax. And if you want, please go scroll down. Yeah. So please, if we looking. Okay, so, yeah. So if you go here, find the latest one. And each chapter, suppose you're looking the income tax calculation, property income, investment income, trading profit, capital allowance, trading loss, carry forward, employment income, pensions. Scroll down, yes, each, capital gain, different taxes gain through different various assets, yes. Losses adjustment, chargeable for the companies, adjustment, inherent tax, please, and we have a VAT, yeah. So that's, which we can, you will see there's 70 minutes long, and it's, and you can download the booklet is available at the start, so that's, according to, I'll take you back. So that's, which I already downloaded. So please, these help you. So which we can, and we have technical articles. Yes, it's a whole library, quite good, and it's a free as well. So that's, help you to enhance your understanding about whichever area you want to look around. So if yes, if you want to do quizzes, I can download this booklet. If I'll quickly show you, so I'll send you as well. So that's, quite good document too. So this is the booklet, and we have within the book we have good few example. But if you want to watch the video, the UK taxation system, income tax, property income, capital allowance, we're doing inherent tax, and then of course if you look, at the beginning you've been given the Finance Act and the VAT scheme. Yeah. So of course here rates, of course again they're not maybe regular updates, which we can look around the latest Finance Act. Not many things change, margin relief formulas and all of plenty of examples which we can embed, so like you will see the UK taxation system. Yes, the different types of taxes, direct, indirect taxes, yes, laws, case laws, and all, which we can, when we'll go through, of course, we'll go through some numericals, and those will address, in the next. So today lesson, please, we already had a discussion about different prospects of and different rates of the taxation, and we discussed about, some elements of corporation tax and individual self-employed and personal allowance and the residency and the company headquarter and the board, where they operate and control. That's, is quite crucial. Really, we need to be look around and then manage accordingly. Okay, that's all from my end. Anyone, any question, please? And I'll share with you these documents on via WhatsApp. And of course, you can use them, and when we'll go through, last lesson, of course, we'll go through the assignment discussion, and we'll pick, examples, and we'll either you want example from your own experience, you can. And other than that, I'll send you the question and answers for each area of topic, so you can maybe tick boxes. And if you want to solve in the light of the latest Finance Act, as you know, the Finance Act is a given, so which is absolutely fine to use. Okay, so yes, please. Is it okay? Anyone, any question?
And is it possible to get, for the assignments when you have to get an example scenario, the data, can we request a scenario?
Yes, I'll send you those, yeah, which we can embed it when we'll do separate, assignment discussion as well. And other than that, I'll send you via WhatsApp group. Huh?
Okay, perfect.
So
thank you.
if you are on the WhatsApp group, I'll send you Kaplan, BPP, Osborne. These are the publisher, yeah. But please,
All right.
we need to be think about, you have to download the whichever Finance Act you want to apply as examples, yeah. And better to be 24 or 25, so better to be used. Huh?
Yeah,
And
that's fine.
we can apply. If you're using software, we can generate things as a scenario, which we can pick, scenario from the book, any scenario, whichever you want to embed it. Yeah? Better to be
All
not,
right.
better to be not use the client examples. Of course, we can't be keeping in your GDPR. If you want to be, don't mention their name, the details, and then it's fine.
All right, perfect.
So that's all from my end. Have a lovely weekend. Nice to meet you all. And I'll share with you on the WhatsApp group. And please, I'll share with you the network events, which is IFA, because as a student, you're already member and you can attend those online, absolutely free ones. Yes, it's happening in various parts of the world, different, like purely taxation, especially managed tax, digitally now. That's, the key topic at the moment is going around. So that's, which I'll send you. And of course, the turnover 30,000 and more is going to be, and reporting more than 50,000 and different time frame they are going to be. And that's, the key value we need to be look around in the tax perspective.
All right.
Okay.
Thank you very much.
Thank you. Thanks for attending. Have a lovely weekend and speak during our next lesson. Thank you. Bye-bye.
Thank you.
Thank you. Bye.